Good afternoon. This is the IronFX gold market review for the 23rd of November. My name is Angelos Zitis and I will be hosting this live report. Just a second for the disclaimer and we'll be starting. All eyes were fixed on the gold market in the past days as it lost considerable ground, performing its strongest one-day sell-off on Monday. The very notable selling momentum could be a signal that a considerable change has taken place in the markets, and this report aims at investigating the most dominant gold market fundamentals as we aim to assist traders with valuable information. As a closure, we will perform a technical analysis identifying important levels and possible price action scenarios. To start with, the much anticipated decision on the Federal Reserve's head was carried out on Monday the 22nd of November when US President Joe Biden backed Federal Reserve Chair Jerome Powell for a second term. At the same time, Lyle Brainard had also been appointed Vice Chair of the Fed. Upon release of the news, the USD index was lifted to a 16-month high price, displaying investors and traders saw confidence in keeping the Fed's policy unchanged with Jay Powell as chairman. Gold dropped on the news as its antagonistic nature to the greenback made its way in the price action. Moreover, after Jerome Powell was confirmed to remain the Fed's chair for the next 4 years, some analysts believe the sentiment of faster tapering of the Fed's QE program and a sooner rate hike than analysts expect has returned to the market's focus, which may explain somewhat gold's movement to lower grounds. It's worth noting that interest rate hikes can possibly devalue the non-interest yielding bullion. Yet, according to Bloomberg, as the Fed continues with Powell as chairman, a risk-on sentiment may be ignited despite the initial sell-off of gold and the stock markets on Monday. On a separate note, silver's reaction was similar to gold's, basically inviting a bearish sentiment. It is worth keeping an eye on today's US preliminary PMI readings, especially related to manufacturing and services, as they can raise volatility for gold and silver temporarily. In the days ahead, traders have a rather active US session with a plethora of economic releases on the 24th of November, which in our opinion is definitely worth keeping an eye on. Early in the US session, we get the US durable goods rate for October, while simultaneously we get the GDP second estimate for Q3 and the weekly initial jobless claims figure. Later on the same day, we get the core PCE price index rate for October, which is monitored by the Fed, we must note, but also the final University of Michigan sentiment for November. Finally, on Wednesday, we get the FOMC meeting minutes from its November 2nd to 3rd, 2021 policy meeting. Thus, gold traders are recommended to be cautious on Wednesday the 24th, with an interesting calendar covering the US session. However, in the next week, on the 30th of November, we get the very important US consumer confidence for November. On the 1st of December, we get the final market manufacturing PMI and the very interesting ISM manufacturing PMI, both for November. As a final note, we must also consider the upcoming special events of Black Friday and Cyber Monday, as even if not directly related to the gold market, can be used by traders as an indication of confidence, possibly leading to volatility within the precious metal sector. Please note, performance of these events in terms of consumer demand and supply can provide important signals for the economy, especially as supply chain bottlenecks seem to persist in the short term. We move now to gold's 4-hour chart. This is our technical analysis. In the most recent sessions, we have observed gold testing the S1 1795.05 support, which can be considered a signal that the selling orders are still in excess. The RSI indicator below our chart remains below 30, implying that the selling momentum formed since Monday has dominated gold's price action, with very little evidence of stabilization so far. On the contrary, we could not dismiss the fact that the strong selling in the past sessions may be observed as an opportunity for traders to go long in case the metal comes under some bullish interest. We note the R1 1821.85 resistance as the possible first stop for the bulls, while even higher the R2 1843.45 line stands firm, used as both a resistance and support in the past. Our highest resistance is noted at the R3 1865.80 level, which was tested various times in November, yet the price action kept returning below it. In our view, the metal can be characterized being in a selling trend for the time being, with some sideways tendencies possibly to appear. If the trend continues, then below the S1, we note the S2 1777.35 support that was last tested in the beginning of November. However, the lowest level tested in November is currently noted as the S3 1758.65 support. That's a wrap, ladies and gentlemen. This video is for the gold traders and gold followers out there. I hope this report benefits you the most. If you would like to connect with us for any reason, send an email to research_team@ironfx.com. That's research_team@ironfx.com. Thank you very much for your time and focus from everyone here at IronFX and myself, Angelos Zitis. Enjoy solid trading.